Hey everyone, and welcome to Earnings Cheat Sheet. It's Alexis Garcia and Ed Carson, and we're here to help guide you through the chaos that is earnings season. Now, some of you might be pros at how to handle earnings periods, but today we're going to go over a few of the basics to help investors prepare for upcoming quarterly reports. So, Ed, let's just take one giant big step back and let's just talk about why is it important for investors to follow earnings reports?
I mean, ultimately, share prices are going to follow earnings and earnings, estimates and guidance. So it just is just so huge to see, this is what it's all about, really. What it comes down to is the bottom line is the bottom line. And it's really important. Earnings reports have become more important in this century because of regulation fair disclosure, which mandates basically you can't give, special information out. So that means that nobody really knows what's going to happen on earnings season, which means that stocks can really react strongly up or down. And it's just something that can upend your portfolio or trigger tremendous gains. So you just have to be very aware of earnings coming in.
Now, we've definitely seen those earnings gaps happen over the last couple of years. So then you're an investor. What's the first thing you should be doing to prepare your portfolio?
I mean, first, know when your stocks have earnings reports. I mean, it's just fairly basic, but this is also, if you have a bunch of stocks, you need to be keeping track of that. And then you have to decide, do you hold those stocks or do you sell them or hedge your holdings? It depends on maybe what cushion you have. If you're basically even, you might say, I'm going to sell. Others say, I'm just going to let them all ride. I don't care. Others say, I sell half my portfolio, but have your rules. Okay, you need to have some rules and keep them consistent, and if the rules don't work out for you, you can need to change them. But that's just fundamental right there.
Now, you talked about holding, selling, or hedging. So, how can you kind of determine what you should be doing once earnings are due?
You know, I, Everybody has their own rule. Often here at IBD, we say if you have a 10% cushion heading into earnings, you can hold that stock. Now, some people say no, 5%. Some people, again, it can be what you're comfortable with. And some stocks are more volatile than others. I mean, some stocks have a history of rising or falling 15%. That 10% cushion may not be enough. So there's a little bit of that variance. So you can do option plays to hedge your bets, like taking, things. And Ken Shreve writes an earnings preview column where he will go over upcoming stocks, and we'll go over some of the option plays you might do with some of those names to give you an idea of how you can hedge some of these names. But it does depend on your style, but you do want to have these rules in place.
If you decide to hold onto a stock heading into earnings, what do you recommend then as the game plan for any sort of post earnings price moves?
Sometimes stock will, if a stock breaks out on earnings, it may be a situation where you add to it or start a new position if you're not in it already. If it gaps up, some people really like that. Those can be powerful, like a big move out of a base. You can add there. Some people would say, well, I'm going to wait a few days, see if it can hold that earnings gap. Some people might say, look, I'm happy, I'm going to take some profits. Again, that's probably more of a short-term swing trader mentality. But again, these are where you want to have those rules in place and have that game plan, because when stocks are moving after moves, like whether it's up or down, you want to be sure, you don't want that emotions. You want to have more of an idea, like, okay, if this happens, I'm going to do this. If this happens, I'm going to do this. And on the downside, if it sells off, you want to be ready. Well, how am I getting out? And do I sell just to sell all if it goes through this level? Do I sell half and see what happens? There's different ways you can go about it. You want to do things that protect your portfolio on that side and also try to keep your emotions out as much as possible.
Now, we talked about knowing when earnings are due for stocks that you own, but can you tell us a little bit about why it might be important to kind of have related companies or names within that same sector on your radar as well?
Look, I mean, a lot of the action what happens for your stocks really is about the reaction of the market and the sector. And if a giant stock reports, like let's say NVIDIA reports, all those AI chip makers are probably going to move on what it has to say, and a lot of other stocks too. So you want to know about, and often those big names, not NVIDIA necessarily, but a lot of names, they'll come out before yours do. And so it'll set the stage. And so your stocks can move a lot, whether it's rivals, customers, suppliers, the same kind of themes sometimes. And obviously, if Microsoft plunges 15% and the market goes down 3%, you're going to feel it even if none of your stocks have anything to do with Microsoft. So it's just really important to know that. Like if your neighbor's house is on fire, you'll be paying attention to it pretty quickly, is how I would say.
All right, Ed. Well, we've covered a lot of the basics, but what else do you look for heading into earnings season?
Well, I'm looking at also not just for the stocks that you own and the stocks that are related to that, but I'm looking for stocks. You want to look for stocks that you don't own. You want to look for the stocks that are setting up and heading into earnings. Again, some of those questions, what's your game plan? But you want to be looking for that because obviously earnings is a huge catalyst. So you want to be watching for that. And one more final thing is that, okay, stocks may move big overnight and, you can take some action, but often it's usually best to wait 10, 15, maybe even half an hour to really make moves, especially on buying stocks, to see if that initial move on the open holds a little bit. And so that's just a way to make sure that you don't get caught in some whipsaw action that sometimes happens with earnings.
All right, Ed. Well, thanks so much for breaking it down for us today. And be sure to join us next week and every week during earnings season to get the latest analysis on key companies ahead of their earnings reports. Those videos will drop every Friday morning. And Ed, what can people expect?
I think we're going to take a look at some of the biggest names and just sort of looking at what to be watching for, especially some of the names that are most important for the market and the leading stocks, and where there might be some buying opportunities as well.
And not only will we have all that information, but we're also going to include a calendar of all the notable reports coming up to help you prepare. I know that would be super helpful for me. That'll be posted on the Investors Business Daily X or Twitter, whatever you want to call it. You can follow us on there at IBD Investors. Thanks so much for watching, and we'll see you all next week.